Personal capital free tool. What it can do for us. Remove the cap on your capital using personal capital free tool. First question, what is the personal capital free tool? Note this image is a little bit blurry. We will go to the actual software soon where it will be more clear, but the personal capital free tool is in essence a wealth management type of tool that does have connectivity to financial institutions in a similar way as you might have been seen with accounting type software connecting to the institutions and pulling in data. Personal capital then focusing in on the balance sheet type of things for the personal data, including investment type of activity. Personal capital free tool things that it can do would include track individual net worth. This is one place where it shines. If you go into the financial institutions directly and you'd like to pull that information into one area so that you could basically get a balance sheet, a personal balance sheet in one place, and then make decisions based on that balance sheet, as well as the investment type of information so you could plan going forward. Good tool for that. It has portfolio management, so when you're thinking about things like a 401k plan or any other type of retirement plan or any type of investments in stocks and bonds, once we have the information in one area, we could better weight our portfolio management and try to think and plan into the future. Once we have that information, we can then use some tools that it includes, and it's a good tool for, and that would include retirement planning. So trying to project out into the future, they have a really neat tool for the projection kind of process to think about planning for things like retirement or things like education in the future, children's education or something like that, as well as big purchases like a home or things like that, that type of planning. They have a tool for that. They also have a budgeting tool, which is a nice tool, may not be as robust as some other softwares, but a good tool for budgeting. And then we can use it to create an income statement as well. This is not the place where the personal capital typically shines, especially for the business income statement, because it's geared towards the portfolio and management and personal asset or net worth, asset and liability side of things. However, we do get connectivity to transactional data, which we can then categorize, and we could make an income statement and possibly create an income statement. It might be enough then for us if we have a small gig work type of company or business or sole proprietorship to do tax work with it as well. How does it compare or complement other types of software that have similar types of functionality? So remember that the personal capital has connectivity information. It can connect to financial institutions, pull in ending balances from financial institutions, and transactional detail. That is similar to other types of accounting software, such as a Quickbooks or a Xero type of accounting software or a Wave type of accounting software, or even Excel at this point has connectivity, so you can actually pull down data automatically from financial institutions. So it's similar in that way. How is it different, or how does it complement? Can it replace some of these other areas, or can it complement some of these other areas? So as we note, although it does have the connectivity information, it's different than normal accounting software, such as a Quickbooks or a Xero or a Wave. And notice that these three softwares, Quickbooks is probably the biggest accounting software that uses a double entry accounting system, and then possibly like a Xero for an online accounting software for small to mid-sized businesses. Wave accounting, last time I checked, does have connectivity to the bank, does use the double entry accounting system. It's in the same class as the other two in that sense, but I believe that's free as well. So you can take a look at that option in terms of the free option. These two, of course, are paid for. All three of them use the double entry accounting system and typically focus in on business information. So when you're looking at these three, you're typically looking at a business. Many more people might have like gig work or something in 2020 than in prior years. They might be diversifying the things that they do. They might have a Schedule C type of business they need to report taxes on and track that information. You can do that with accounting software. However, they focus in on the business, and usually if you talk to a CPA or an accountant, they would suggest that you separate your business income and your business accounts for financial institutions such as your checking account and credit card accounts. When you work with the financial data for these different types of accounting software, you're typically working and focusing in on a particular area, typically the business checking account and the business credit card accounts. And then you're going to use that financial data in order to create an income statement, the performance statement, as well as the balance sheet using the double entry accounting system. These three softwares will use then a double entry accounting system to create the balance sheet and income statement, the financial statement information from the actual transaction data rather than basically pulling in the endpoint data, meaning they're not going to create the balance sheet from the transactional data. When they link to financial institutions, they're not designed to link to the financial institutions to tell us where we stand at the end of the day, to tell us where our balance is at the end of the checking account or our portfolio balances. They're designed to take the financial transactions to create the balance sheet and the income statement and then double check the balance sheet. For example, the checking account amounts to the bank balance sheet with something like a bank reconciliation. Personal capital is a bit different in that it is focusing in on the net worth. So when we do a connectivity for something like a personal capital to financial institutions, it will pull in the ending balances of the checking accounts, the saving accounts, as well as other balances, including the investment accounts, 401k, and loan type of accounts, such as loan type of accounts, mortgage accounts, credit card accounts. Those all pull in, and they'll pull in the ending balance. And therefore, we're not using the linking functionality in the same way as we would with typical double entry accounting software. Instead of just getting the transactional data, we're actually focusing in on pulling the ending balance so that we can basically put together a net worth calculation based on that ending balance, relying on then the financial institutions to give us that ending balance, as opposed to looking at the financial institutions to double check what we have done in our system using basically the double entry accounting system. So that's one way the personal capital can kind of complement what is being done, meaning it's going to focus in on the personal side of things as opposed to narrowing down like you normally do in accounting software with the business side of things, although you can use double entry accounting system software for personal data as well. I typically do that too, but you could still use personal capital as a complement to that, focusing in and drawing in on the personal data as opposed to zeroing in on the business information, which is typically what you do with the double entry accounting software. It also will pull in, like we say, those ending balances, and the focus is in on the portfolio. So it's going to give us a lot more detail than in the portfolio type of information for like a 401k plan or like a 403b plan, or any type of work retirement plan, as well as any kind of investments in the stocks and bonds. And once we have that information in here, it has tools for budgeting and then planning type of situations, so we can do much better projections on the personal side of things with the tools, because that's what it's designed to do in terms of our asset management for long-term type of investments for things like retirement planning, which is not typically, once again, what accounting software is typically used for. Accounting software is typically used to create financial statements from the transactional detail using the double entry accounting system. Once you have that information, then you might use another kind of planning tool for long-term planning, such as a personal capital or something like that, to do longer term kind of calculations into the future for things like retirement or other big purchases. So those are, now you might be saying, hey, look, I don't want multiple software packages. I would like one software package or one software package that can kind of fit my needs. And of course, that will depend on what your needs are. If you have some small business type of transactions that you need to create an income statement for example, and you have personal information that you would like to track together and plan for retirement and whatnot, then you could think about, okay, could I use like accounting software for that, like a QuickBooks, a Xero, or a Wave for that? And you can, for example, use QuickBooks to track personal and business data. You can even do it in one file, but a lot of accountants wouldn't recommend that as much. They like you to break out between the checking account for business and personal, but if you have a small kind of gig work type of business, you might use one kind of QuickBooks file. We do have courses on that, and you can take a look at it, and you can differentiate the income statement with the use of class tracking. So there is a feature that you can basically break out the class tracking. What the QuickBooks does not have, if you were to do that on the personal side of things, you would have to basically manually input some of the other data, such as a 401k plan, if you're using it for personal data, or those types of things, so that you'd have to manually input the changes, and typically you would put kind of the lump sum balances in. You don't have as much flexibility with the detail in something like a 401k plan or something like that with a QuickBooks or other accounting software. Typically with the personal capital, you can connect and get that ending balance. You do have the more flexibility with those ending balance information, but if you needed to pull out an income statement, it's not going to just generate an income statement because it's not designed to do so. That's what basically a QuickBooks or accounting software is designed to do with the financial data. However, it does give you that financial data and allows you to assign categories and tags, which we will do. And you can take that to build up an income statement. So if you needed something for a Schedule C or for personal purposes and you wanted to build up an income statement, then you can do so in some similar ways as you would with accounting software. However, there's not a link between the income statement and the balance sheet, so you don't have that double entry accounting system as a double check. Therefore, if you have a small business, a little bit of gig work, maybe you can kind of get away with the personal capital to use that. But if you've got a large business, then of course you're going to want to start to use the double entry accounting system at some point as a double check to make sure everything is running smoothly. And so you can use invoices and bills and all that kind of stuff that you might need for the accounting system. Note that Excel also has functionality where you can download the transactions as well. It has a template called Money in Excel, which has a similar kind of functionality. Now, also note that if it's at the end of the year and you're thinking, okay, it's the end of the year, say it's the end of 2020 or you're in 2021 and you're saying, I got to do all my taxes for 2020, and you've never used any of these softwares before, and you're saying, I just want to get the banking information that I can compile in some way, shape, or form into an income statement to help me out, say with tax preparation, say a Schedule C at this point, then you could use something like a personal capital, but you're limited possibly to the amount of transactions that will be downloaded from the institution. It might not download as much of the transactions, and you could be somewhat limited in that degree. If you were using personal capital for the entire year, then you should have the transactions for that time period and can then categorize them in a similar fashion as you would, and we'll take a look at that, just test that process out so you can see how that might work. If you are in that situation, you could use something like an Excel. The Money in Excel, it does download a whole lot more information, like 1 to 3 years of data. So if you need to download a whole year's worth or 2 years worth of data, you could possibly use something like a Money in Excel to do that and then sort the information with that. Or you can use the accounting software, which also could be limited with the number of transactions that can be downloaded. But you can usually go to the financial institution and download the information directly from it and then upload it into QuickBooks if needed to get more data. If you need to get the whole year's worth of data or 2 years worth of data uploaded into an accounting software like a QuickBooks or a Xero. Now here's just an example of the Money in Excel layout. You'll typically have the net worth on the left-hand side, which is also a navigation pane. So you can actually go into any of these accounts, and if you click on them, you'll get to more detail with it. Then you have the drop downs up top, and we'll go into this in more detail with the overview. And this is your net worth planning. So it's really focused in on the net worth. Then you've got your banking information and your budgeting information. It does have the cash flow information, which is transactional detail. So it does give you the transactional detail. However, it doesn't create an income statement automatically from that transactional detail. It allows you to categorize, put accounts to it in essence, and tags, which then allows you to take that data and create an income statement fairly easily. And we'll actually practice that just so you can see how that might look as well. And then we have the investing information. This is what it's really geared towards, the actual holdings you have. So if you have money in some kind of stocks and bonds, it could give you more detail about those holdings, the balances, the performance, try to give you some scenarios and checks about the balance that would be there. And then the U.S. sector information. Then it'll give you the planning tools, which is also something that's not in accounting software, typically like a QuickBooks or a Xero. Retirement planning. It uses some pretty nice statistical analysis to do the retirement planning. We actually go over that and read through it a little bit of detail so you can see how that works. The saver planning, retirement fee analysis. So you can actually analyze the fees that you have with brokerages and see if that's worthwhile to do. And then the wealth management. And then if you wanted to talk to an advisor and whatnot, you can go into that, which we might talk a little bit more about in future presentations. So if you compare this balance sheet, notice this information on the balance sheet, anything that comes in from the financial institution. That could be cash, checking accounts, saving accounts, CDs. It could be brokerage accounts for 401k plans, IRAs. It could be any other kind of stock and bond type of account can pull into here, and then it'll update it, giving you the ending balance on it so that it gives you that data for your net worth. Also, loans, mortgages, credit cards can typically be pulled in as well, so it can give you that nice net worth. You can also add other items such as your home value, car, and whatnot. You would manually input those up top. We'll do that in a little bit more detail later. Now, this is a little bit different than what you would do for something like a QuickBooks. If I jump over to a QuickBooks just for a comparison, note that you do have the same kind of detail where you can connect to a financial institution, but once again, you don't typically connect to something like a brokerage account or anything like that, because you're typically going to be connecting to a checking account, and even then, specifically the checking account that's going to be designed for your business, focusing in on the business transactions, although you could use class tracking and use it for personal detail as well. But then also note that that detail, the transactions from the bank, not the ending balance, is what you're focused on. And then you're going to use those transactions to then build something like a profit and loss report, which is something that QuickBooks does well as a balance sheet. So the balance sheet is going to be constructed from the transaction detail. So that means that the ending balance in something like a checking account is not going to be coming from the bank. QuickBooks isn't going to just say, hey, the bank says you have this much in the checking account. No, we're going to have to do the transactions, enter all the transactions, and then we double check to the bank. That's going to be an internal control to see that we are doing the accounting basically properly. So that is different than something like a personal capital, which does basically just say, hey, we just pulled in this ending balance from the checking account, and that's what the checking account says, right? That's what you're doing with personal capital. You're pulling in the ending balances. And if something like a QuickBooks, you're not doing that. Even if you're using it for personal purposes, what you're doing is basically putting in the transaction detail and then checking it to the ending balance on the financial institution as an internal control that you've entered the data correctly. So that means the personal capital does a really good job about this kind of balance sheet if you want to be dependent, if you're dependent on just the balances in the financial institution. And it also does a good job about pulling in the personal data, which you might not be as focused in on if you're using accounting software such as a QuickBooks. If you're using something like a QuickBooks, then you might be focusing in on, if you have a small business, for example, the income statement, because you're going to need that possibly at the end of the year for some type of work. If you have small gig work or something like that, then you could consider using QuickBooks to basically compile, or other accounting software, a free one like Wave Accounting or something like that, I believe is still free. You could consider doing that, but you'll have similar kind of issues that you're still going to have to take the banking transactions from the bank and then categorize them in some way, shape, or form. And this is where the difference comes in there. You'll have to categorize your transactions and then basically assign them so that the system can then build the income statement and balance sheet. In a double entry accounting system, you have to know a little bit about the way the forms work in something like a QuickBooks to better assign it to either a balance sheet account or an income statement account. You got to have some idea of what a chart of accounts is, and so on and so forth. On the personal capital, you have a similar kind of functionality. They won't actually create the income statement, but they'll give you the transactional detail for it, and they'll allow you to assign basically accounts, which are going to be called classes and subclasses, which once assigned, you can take that data, you can export it to Excel, which will show, and then make a pivot table with it, or just basically create an income statement from that data. So no matter what you do, if you're trying to carve out an income statement, you're going to have to assign the transactions in some way, shape, or form from the software to carve out an income statement, even though you're taking the data from the bank, because the bank doesn't have enough information to assign classes as to whether something is personal or business, and it doesn't have the ability to assign accounts. Also note that personal capital will take in different accounts too. So if you have like a credit cards and checking accounts and whatnot, and you're trying to pull that information and carve out the income that's business from it, then it can be useful to put it in one place, because then you can sort out those transactions even though they're coming from different sources, like a checking account, credit card accounts, and whatnot, trying to assign business and personal from there. So that's kind of a quick, we'll do a little bit more comparisons between QuickBooks and personal capital as we go. Also note that you do have an option of other softwares that compete with like a personal capital, but would be like a Quicken, which used to be owned by Intuit, which is the owners of QuickBooks, and was marketed as, and I haven't looked at it as much since that time, but it's always been marketed as something that's more individually focused. So it is focused more on individual finances. You can have similar functionality where it kind of pulls in the ending balance data and tracks the detail, but it has more functionality typically in Quicken. So you might be able to construct like an income statement and whatnot within Quicken, but that added functionality also makes it a little bit more complex, because when you're thinking about things like the value of stocks going up or down, from a financial accounting standpoint, there's questions as to how do we record the unrealized gains and losses? Should we record unrealized gains and losses and the fluctuations in the markets, or should we not do that until we realize the gains and losses, and so on and so forth? So from an accounting standpoint, there's actually some nuances in terms of how you're going to record like investments type of activity. And Quicken gives you some functionality to do those things, I believe, more than a personal capital, but obviously that adds a bit of complexity too. So I haven't looked into Quicken for some time, but it's another option. I believe it's a option that's currently on the desktop. They're probably moving to an online application, such as similar to other softwares like a Zero or Wave, to try to go online with it. But I think it still has a desktop capacity to it. But again, you might want to look at that. Also note that there's another software that seems to be linked with a personal capital a lot, called Mint. And I think this one is geared more towards budgeting type of information, which personal capital has, but it's probably not personal capital's strong point. Budgets being something that you're projecting out fairly shortly into the future. And personal capital kind of shines in long-term planning, when you're planning for like retirement and portfolio management type of stuff. So if you want short-term budgeting type of stuff, maybe you want to take a look at Mint and do some comparisons with it as well. Also, just note that Excel has some functionality with something called Money in Excel, and that's going to be a template that would be available if you use something like a subscription model for Microsoft Office. And it does some similar things too. You can pull in multiple institutions if you need to put something together like an income statement, and do some similar kind of calculations as we'll do in this practice problem for personal capital. One of the benefits with this template, if you're trying to look at multiple transactions to put together an income statement for like a year ago or something like that, and you don't have anything at this point in time, you haven't used anything, then it will pull in actually a lot of data. So it pulls in like 2 to 3 years worth of data that you can then categorize if you're trying to carve out like an income statement. So we have a course on that too, if that's something that you're trying to do. If you're at the end of the year and you're saying, hey, I need all the data from multiple different accounts put together so that I can then categorize that data and create an income statement for it for some small amount of gig work or something that I had that I need to do a Schedule C tax return for, then this one might pull in a little bit more data to help with that type of thing. So that's another option that you might have. So those are just some comparisons between personal capital and some of these other softwares that it could be a complement with. You could use them together, or that you might be able to use one or the other.